Usually, a medical x-ray gives you this absolute binary precision, right? It's just purely mathematical.
Yeah, very black and white.
Exactly. You break your arm, the x-ray shows that jagged white line, and the doctor just points and says, there it is, broken or not broken.
Right.
But if you try to x-ray your retirement account today, you are definitely not getting binary precision.
Oh, not at all.
You're just looking at this, like, murky, terrifying fog. I mean, you spend decades, literally your entire working life, building up this nest egg, and there is this universal high-stakes anxiety that just hangs over it for you.
It's exhausting for people, honestly.
It is. One unpredictable economic storm, one bad headline out of nowhere, and you can watch decades of hard-earned savings just evaporate from a screen. So today, we are decoding the ultimate financial X-ray vision designed to weather those exact storms. We're talking about gold IRAs.
And, for you listening, that feeling of extreme vulnerability with your life savings is entirely justified. I mean, you are constantly told by financial advisors to diversify your portfolio.
Always. Diversify. Diversify.
Right, but let's be honest about what that usually means in practice. Standard diversification often just involves buying different flavors of the exact same vulnerable stock market.
Yeah, like different tech stocks or whatever.
Exactly. And if the whole market goes down, all those different flavors go down with it.
Which is exactly why we are going on a mission for you in this deep dive.
Yeah.
We aren't just doing a high-level theoretical skim of precious metals here.
No, we really want to get into the weeds.
Right. We are going to objectively compare two of the absolute heavyweights in the gold IRA industry. We're looking at Augusta Precious Metals and Goldco. We really want to give you the precise clarity you need to actually make an informed decision for your own financial future.
And we are anchoring this entire discussion in, honestly, a phenomenal comprehensive market analysis by a guy named Doug Young.
Yeah, his research is incredibly detailed.
It really is. Doug is a financial markets researcher with over 20 years of experience. And crucially, he spent 16 of those years acting as a financial director.
Wow, so he's not just an academic.
No, not at all. He knows how the plumbing of the financial world actually works from the inside.
Yeah.
And specifically in the precious metal sector, he has evaluated over 80 gold IRA companies since 2011.
80! That's insane.
Yeah, he knows exactly how to tear down these company profiles, look past the slick marketing, and find out what is actually real. But I do want to acknowledge something right out of the gate here. Financial jargon can be incredibly overwhelming.
Oh, absolutely. I mean, IRAs, direct rollovers, macroeconomic correlation, it can make anyone's eyes just glaze over entirely.
Precisely. So our goal today isn't just to, barrage you with a dry list of facts and minimums and fees.
Yeah.
We want to drill down and understand why these investment vehicles actually matter to your life.
Yeah, how they mechanically protect your wealth.
Exactly.
Okay, let's unpack this. Before we pit Augusta and Goldco against each other, we really need to build the foundation. What exactly is a gold IRA? Because you can't just buy a handful of gold coins, stick them in a shoebox under your bed, and tell the IRS it's your retirement fund, right?
No, I mean, doing that would trigger an absolute nightmare of tax penalties for you.
I can only imagine.
Yeah, a gold IRA is a very specific IRS-sanctioned legal structure. It is what's called a self-directed individual retirement account.
Okay, self-directed.
Right. Standard IRAs kind of force you into paper assets, so stocks, bonds, mutual funds.
Yeah.
But a self-directed IRA opens the door to alternative assets.
Oh.
So in this case, you are holding physical, tangible precious metals. Actual gold, silver, platinum, or palladium, all wrapped up securely in a tax-advantaged shield.
The defining feature here really seems to be how these metals behave compared to those standard paper stocks, They don't move together.
Yeah, that is the core mathematical mechanism that makes this whole thing work. Gold basically has a non-correlated relationship with equities.
Meaning they don't hold hands and jump off a cliff together?
Exactly. When the stock market is experiencing a massive sell-off fueled by panic, gold often moves in the exact opposite direction. Doug Young points to a very visceral example in his research, the 2008 financial crisis.
Oh man, I remember that vividly. People were opening their 401k statements and literally feeling physically sick.
Yeah, it was brutal.
Lehman Brothers collapsed, toxic mortgages infected everything, and global equities were just in absolute freefall.
Right, millions of people watched half their wealth vanish in just a matter of months. But the underlying mechanics of that crash didn't pull gold down with it.
Interesting.
In fact, while the financial system was basically collapsing under the weight of bad debt, gold prices actually soared.
Wow.
Yeah, investors who had a portion of their retirement locked in gold IRAs saw their portfolios remain dramatically more stable.
And that happens because gold is tangible, right? It's
Yeah,
finite.
exactly. A central bank cannot simply print a trillion more ounces of gold to bail out a failing bank.
Right. You can't just invent it out of thin air.
No, that physical scarcity is what makes it a historical safe haven and an incredibly powerful hedge against inflation and, currency devaluation.
I was actually thinking about this mechanism while reading Doug's analysis, and I kept coming back to this analogy.
Well, let's hear it.
So think of your traditional portfolio, your stocks, your mutual funds, like the sails of a ship.
Okay, I like that.
They are fantastic for moving fast when the economic winds are blowing in your favor. You want those sails up to catch the growth. But a gold IRA, that is the heavy iron anchor.
That paints a perfect picture of the dynamic, honestly.
Because it's not going to win you a race. It's not designed for high-speed, aggressive growth.
Right, that's not its job.
Exactly. But when a massive, unforeseen storm hits the market, that heavy iron anchor is the only thing keeping your ship from crashing into the rocks and losing everything. It provides that ultimate baseline stability.
It really does. And dropping that anchor doesn't mean giving up your tax advantages either.
Oh, really?
Yeah, just like a traditional IRA, your contributions to a gold IRA can be tax deductible, and your gains grow tax deferred until you take distributions in retirement.
Okay, that's a huge deal.
It is. But the mechanics of how you get the money in there are crucial. You use what's called a direct rollover.
So you aren't just, cashing out your current 401k and walking around with the money in a briefcase.
No, please don't do that.
Because if you do that, the IRS is going to hit you with early withdrawal penalties and taxes, right?
You've identified the exact trap people fall into. If you withdraw the money yourself, which is an indirect rollover, you have this strict 60-day window to reinvest it, or you get heavily penalized.
Yeah, that sounds like a stressful 60 days.
Very. A direct rollover avoids this entirely. It is a custodian-to-custodian transfer.
Meaning the companies talk to each other.
Exactly. The money moves seamlessly behind the scenes, straight from your current retirement account into your new self-directed IRA. You never actually touch the money, so it maintains its tax advantage status the entire time.
That makes total sense.
However, the IRS has incredibly strict rules about the physical metals themselves. As we joked earlier, absolutely no shoeboxes.
Right, no burying it in the backyard?
No. The metal must be held by a qualified custodian and stored in an IRS-approved, highly secure depository.
Let's pause on that word custodian for a second. For someone who doesn't work on Wall Street, what does that actually mean in practice?
Think of a qualified custodian as a highly regulated financial babysitter.
A financial babysitter, I love that.
Yeah. Their legal responsibility is to handle the complex reporting paperwork, ensure the physical gold you are buying meets strict IRS purity standards, and basically keep the government regulators happy. They manage the legal logistics so you don't accidentally break a tax law.
Which brings us to the actual companies that facilitate this entire ecosystem.
Yeah.
Because you need a broker to sell you the approved metals, a custodian to manage the IRS paperwork,
Yeah.
and a vault to actually hold the physical bars.
Exactly. It's a whole package.
Right. And if you are listening to this right now, I want you to look at your own mix of assets. Is your entire future completely dependent on the wind continuing to blow perfectly for the stock market?
It's a scary question to ask.
It is. But if the answer is yes, then understanding these next two companies is critical.
It is entirely about finding the right institutional partner to help you safely drop that anchor.
So let's look at the first major contender in Doug Young's analysis. Augusta Precious Metals, established in 2012. And here's where it gets really interesting.
Oh, yeah.
When Doug pulls back the curtain on their reputation, it is almost entirely flawless. I'm looking at his notes here. Money Magazine's best overall gold IRA company for 2023 and 2024.
Huge honor.
Investopedia named them for most transparent pricing in 2023 and 2024. TrustLink has them as best of for 6 consecutive years.
I mean, the sheer volume of industry accolades is staggering for a single company.
But here's the stat that actually made me stop reading and squint at the page. Doug reports that Augusta has 0 complaints all time with the Better Business Bureau, the BBB, and the Business Consumer Alliance, the BCA.
0?
They hold an A+ and a AAA rating, respectively. But I have to push back on this. 0 complaints in over a decade of operation.
That sounds crazy, right?
How is that even mathematically possible in the financial sector? We live in an era where people leave 1-star reviews on the internet because their coffee was, like, a degree too hot.
Yeah, people love to complain online.
Exactly. So in an industry dealing with hundreds of millions of dollars of people's life savings, is there a catch here?
It really does sound statistically impossible at first glance. But what's fascinating here is the sheer infrastructural effort Augusta puts in to make that zero a reality.
So they actually engineered the zero.
They do. Doug Young's research highlights their secret weapon, which is an incredibly robust in-house compliance section. And this isn't just a rubber stamp department. It is led by an independent adjudicator.
Wait, really? So they're actually paying someone, essentially an internal Supreme Court judge, whose sole job is to actively hunt for things the company might be doing wrong and fix them before a customer ever feels the friction.
That is the exact mechanism. They are preempting complaints by finding the flaws in their own system first.
That is wild.
Furthermore, Augusta voluntarily subjects itself to regular third-party compliance inspection.
Might auditors in.
Yes, they are actively inviting outside auditors in to dissect their practices. They prioritize transparency to an almost obsessive degree, but it goes beyond just defensive compliance. It's also their proactive approach to education.
Right. Doug talked about their education team.
Yeah, they have an in-house expert named Devlin Steele, who is a Harvard-trained economist, and he personally leads their one-on-one web conferences with potential clients.
Doug mentioned this, and it blew my mind. You can literally get on a private video call with a Harvard-trained economic analyst to review your specific retirement goals before you spend a single dime.
Yeah.
They're essentially vetting your macroeconomic understanding before they let you buy.
They want to ensure you actually understand the macroeconomic environment and how gold fits into it. They aren't just taking orders, they are building highly educated clients.
That's a huge distinction.
And they back this up with massive guarantees. A 7-day, no questions asked, money-back guarantee, a 100% satisfaction guarantee. Plus, they partner primarily with the Delaware Depository.
Which is top tier, right?
Oh, absolutely. It's a premier, highly secure, IRS-approved storage facility, heavily insured by Lloyd's of London.
Okay, but looking at this setup, the Harvard economists, the private webinars, the flawless compliance, the premium vaults, this screams high net worth.
Right.
I mean, they can't possibly be offering this level of white glove service to someone rolling over a tiny starter 401k. What is the actual barrier to entry to get past the velvet rope?
You've deduced the crucial reality check here. Augusta is definitively a premium service, and they require a premium commitment.
So what's the number?
According to Doug's breakdown, Augusta requires a prospective client to have a minimum of $100,000 in qualifying retirement savings, and they require a steep $50,000 minimum purchase to actually open the Gold IRA.
Wow, so $50,000 just to get through the door. They are very clearly targeting a specific tier of investor who has already amassed a sizable nest egg and is now looking for that ultimate worry-free protection strategy.
Which naturally creates a pivot point in Doug's analysis. Because a $50,000 minimum is going to freeze a lot of everyday hardworking investors completely out of the market.
Right, let's be real. Not every ship on the ocean is a massive galleon. A $50,000 anchor is going to sink a smaller boat before the storm even hits.
That's a great way to put it.
What if you are listening to this, you know you need that heavy iron anchor, but you don't have 50 grand to drop on it all at once? Or what if you want a little more variety in the actual metal you are holding?
Right, maybe you want some different options.
Exactly. That is exactly where Goldco steps into the ring.
Goldco serves as a brilliant counterweight to Augusta in this analysis. They have also been in the business for over a decade, but their structural approach targets a slightly different set of investor needs.
Right off the bat, the barrier to entry is literally sliced in half. Goldco only requires a $25,000 minimum to start.
Much more manageable.
It instantly makes them accessible to a much broader swath of the population who wants to protect their retirement. But it's not just about the lower entry fee, right? It's about the broader menu of what you can actually put in the vault.
Yeah, if we connect this to the bigger picture, Goldco really represents flexibility.
Okay.
While Augusta focuses almost exclusively on gold and silver, Goldco offers a significantly broader selection of precious metals. They bring platinum and palladium into the mix.
Let's dig into the why there. Why does adding platinum and palladium matter to a retirement account? What do they do that gold doesn't?
It comes down to the macroeconomic drivers of those specific metals.
Meaning what makes their prices go up and down?
Exactly. Gold's price is largely driven by fear, inflation, and currency devaluation. But palladium and platinum, those are heavily driven by industrial demand.
Really? Like manufacturing?
Yeah. They are absolutely critical in the automotive industry for manufacturing things like catalytic converters, and their supply chains are tied to specific geographical mining regions.
Oh, wow, I had no idea.
So if you hold a mix of gold and palladium in your IRA, you are hedging against human panic and investing in global industrial output simultaneously.
That's fascinating.
Their price drivers can be entirely different.
Hmm.
If you want a highly nuanced, diversified metals portfolio, Goldco gives you the tools to build it.
And they give you more vault options too, right?
They do. They offer more flexibility on the back end, providing multiple secure storage facility options across the United States, rather than primarily utilizing the Delaware depository.
And then there's the promotion. Doug's research outlines this incredibly aggressive perk Goldco runs.
Oh, this huge incentive.
Yeah, if you purchase between $50,000 and $99,000, they will give you up to 5% back in free silver. And if you go over $100,000, they bump that up to 10% in free silver.
The mechanics of that offer are just massive for an investor's bottom line.
Literally free money, well, free silver.
Right. If you are rolling over a $100,000 IRA, they are effectively handing you up to $10,000 in physical, tangible silver simply for choosing them as your broker.
It is a wildly appealing incentive. But I want to play devil's advocate here for a second, because we praised Augusta's flawless zero complaint record earlier.
Sure.
When I look at the chart Doug put together for Goldco, the math looks very different. In the last 3 years, Goldco has had 48 closed complaints at the Better Business Bureau and 1 at the BCA.
Yeah, it's true.
Hold on. If I'm a listener trusting a company with my life savings, a stack of 48 complaints doesn't just sound like a statistical anomaly, it sounds like a massive red flag. How do you justify an A-plus rating with that much negative feedback?
It is a stark contrast, and obviously 48 is infinitely higher than 0, but it is vital to put those numbers into the broader context of how these rating agencies actually work.
Okay, how so?
Doug's analysis handles this very fairly. You have to look at the resolution mechanism and the sheer volume of their business. Goldco still maintains an A-plus rating with the Better Business Bureau and a AAA rating with the BCA.
But that seems contradictory. How do you maintain an A-plus with dozens of complaints on your public record?
Because the BBB doesn't just grade a business on whether a complaint was filed. They grade heavily on how the business responds to and resolves that complaint.
Oh, I see.
The fact that Goldco retains the A-plus rating means that when a customer experienced friction or an administrative issue, Goldco's customer service apparatus stepped in, addressed the mechanics of the problem, and resolved it to the complete satisfaction of the regulating body.
They actually fixed the issues.
Yes. And when you factor in the massive volume of transactions they process over a decade, an A-plus rating proves their overall customer satisfaction remains incredibly high.
That makes sense.
It is a very solid, battle-tested track record, even if it lacks the magical 0 of Augusta.
So what does this all mean? We have laid out the foundation. We understand the mechanics of the anchor and the rollover.
The nuts and bolts.
Right. We have Augusta with its flawless premium white glove approach and strip compliance. And we have Goldco with its accessibility, industrial metal variety, and massive promotional perks.
2 very strong options.
When Doug Young looks at all of this data, all his 20 years of market experience, who does he actually crown the winner?
Doug Young's final verdict is definitive. He concludes that Augusta Precious Metals comes out on top.
Even with the hefty $50,000 barrier to entry locking some people out.
Yes. Doug breaks down his reasoning very clearly. For him, the ultimate currency in the precious metals market is trust and transparency.
That makes total sense.
Augusta's unrivaled commitment to proactive compliance, their unblemished BBB and BCA record, and the sheer volume of industry awards validating their practices, it all creates an environment of absolute trust.
Plus the Harvard economist.
Exactly. Doug points to the unique one-on-one educational web conferences with their team and those robust peace-of-mind guarantees. For an asset class designed entirely around security and anxiety reduction, Doug feels Augusta provides the ultimate bulletproof experience.
It makes total logical sense. If you are buying a product specifically so you don't have to worry about the economy, you want to buy it from the company that causes the absolute least amount of worry. So to synthesize this for you listening, if you want absolute premium, white glove, zero complaint service, and you have that $50,000 minimum ready to deploy, Augusta is your clear winner, according to the data.
Yes.
But If you have $25,000 to start, if you want to mix industrial metals like platinum and palladium into your vault to capture different market drivers, or if you really want to capitalize on that massive free silver promotion to instantly boost your physical holdings, Goldco is still a highly rated A-plus alternative that is incredibly well respected in the industry.
You are simply matching the structural strengths of the company to this specific mathematical reality of your own financial situation.
Which is exactly what this deep dive is all about, empowering you to make the choice that actually lets you sleep at night.
And looking at all of this, this raises an important question. We've spent this entire time talking about the mechanics of securing wealth, rollovers, and tax advantages.
It's technical stuff.
Right, but I want to challenge you, the listener, to ponder something a bit deeper.
Oh, I love where this is going.
We live in an increasingly, almost entirely digital world. Your salary is direct deposited. You pay for groceries by tapping a piece of plastic.
Or just tapping your phone.
Exactly. Your retirement account is just a sequence of pixels on a phone screen. Your wealth is largely theoretical, constantly vulnerable to server glitches, cyber threats, or complex algorithmic crashes.
It's all just ones and zeros.
It is. So how does the act of taking a portion of your life savings and converting it into a physical, historically proven, heavy metal asset change your psychological relationship to your own money?
That's a great question.
Does the simple act of knowing there is a finite, tangible object sitting in a secure vault with your name on it fundamentally redefine what security actually feels like to you?
That is a profound thought to leave on. Because the math matters, obviously, but the psychology of your money is what dictates your peace of mind.
Exactly.
If this conversation sparked something for you, if you are looking at your portfolio and thinking you need to drop an anchor before the next storm, we strongly recommend that you continue this research.
You definitely should.
You need to go to the Gold IRA Company's Bulletin website. It is an absolute wealth of related information, detailed comparisons, and expert analysis to aid in your financial journey.
A great resource.
That website is goldiracompaniescompared.com. Again, that is goldiracompaniescompared.com.
It is the smartest next step you can take for your own due diligence.
We have also put a direct link to this information right in the episode notes below, so you can just click through. Thank you so much for joining us on this deep dive. We wish you the absolute best of luck in securing your golden nest egg. And remember, when the economic storm clouds start gathering, make sure you aren't just relying on your sails. Make sure you know exactly where your anchor is.